This is a lecture from Open Tuition. For the free lecture notes that go with this podcast, please visit opentuition.com.
Okay, let's go through the last question in section B of the paper F5 specimen paper, which is question 5, truffle. As always, look at the requirements first. Required, part A, calculate the following variances for Truffle Co. Labour rate planning variance, labour rate operational variance, labour efficiency planning variance, labour efficiency operational. 8 marks. And that's the numbers, clearly. Part B, assess the performance of the production manager for the month of November. 7 marks. And so yet again, a lot of written there. You know, overall, 50% of the exam you can expect to be either completely writing in section B, as here, or those statement questions which were in the multiple choice questions where there were no calculations. So it's no good simply learning calculations and trying to pass on that alone. You've got to do a different written, a reasonable written. You've got to make it a decent attempt. All right, this one with 50% pass mark, you can just pass on the arithmetic. But as I keep saying, it's so dangerous. It only needs one silly mistake and you risk getting less than half marks unless you've done something for the written. And although it's not pass or fail each question separately, you know, it's 50% on the exam as a whole, you should be aiming to get at least half marks on every part of every question. Because once you've got your half marks on every bit of a question, everything extra you've done is almost a bonus and makes it progressively more certain that you will pass. Anyway, it is obviously variances, and I mean it is virtually guaranteed you'll have a question on variances, whether it's planning and operational as it is here, or mix and yield, which this isn't. All right. Anyway, let's have a read. Truffle makes high quality handmade chocolate truffles, which he sells to a local retailer. All chocolates are made in batches of 16 to fit the standard boxes supplied by the retailer. The standard cost of labour for each batch is $6 and the standard labour time for each batch is half an hour. In November, Truffle had budgeted production of 24,000 batches. The actual production was only 20,500 batches. 12,000 labour hours were used to complete the work and there was no idle time. All workers were paid for their actual hours worked and the actual labour cost was 136,800. Production manager had no input into the budgets. At the end of October, the managing director decided to hold a meeting and offer staff the choice of either accepting a 5% pay cut or facing a certain number of redundancies. The staff subsequently agreed to accept the 5% pay cut with immediate effect. At the same time, the retailer requested the truffles to be made slightly softer. This change was implemented immediately and made the chocolates more difficult to shape. When recipe changes such as these are made, it takes time before the workers become used to working with the new ingredient mix, making the process 20% slower for at least the first month of the new operation. So there we are. In the first paragraph, we were told what standard costs were, what we were budgeting on. We're told what was actually produced and how much we actually paid and how much it actually worked. But there was this change of plans in the second paragraph, that we cut the pay by 5%, accepted it. And for other reasons, we expected work to be 20% slower. So first of all, let's have a look. What was the original standard? It's only labour we're concerned with, labour rate, labour efficiency. So the original standard for labour per batch, it said in the first paragraph the standard cost is $6 and the standard labour time for each batch is half an hour. So the standard for each batch should take half an hour. Be careful here, this is the first place a lot of people went wrong. It says the standard cost for each batch is $6. Well, if each batch is taking half an hour and costs $6, it must mean surely that the standard pay was $12 an hour. Half an hour at a standard rate of $12. That's how we got the $6 a batch. So that's what we expected to take, half an hour, and that we'd have a pay rate of $12. The second paragraph, though, we revised things. And what does it say? First of all, they're going to be 20% slower. So if they're 20% slower, well, instead of half an hour per batch, add on 20% of half an hour, and we then expected them to take, I think I'm right, 0.6 hours. And separately, they had a pay cut of 5%. So instead of paying them $12, we revised the pay, and what we should be paying them is $11.40. And I will fill in, but it's not, I don't think, going to be desperately relevant. But as a result, each batch should cost us for labour $6.84. So that was the original budget. This is how we've revised it. And I'll write down where relevant in a minute, but we are told how much we actually spent, again in the first paragraph. All right, now before I start writing down the variances, be very careful here. If you've been, because you may have seen me mention in other places on the website, there are two ways of calculating planning and operational variances. The previous examiner used to use one way, the current examiner does it a different way, and the two ways do give different answers. And we could argue all day which is the better way. There's arguments for both. If you're using current textbooks, current revision exam kits, if you're watching our lectures, then all of them do it the way the current examiner does it, which in fact is the easier of the two ways. However, if you're using old books will be doing it the way the previous examiner did, which gives different answers. Now the examiner accepts either. She always says in her answers to planning and operational questions, she'll accept either of the two approaches, even though the answers are different. I'm not going to do it two ways. You know, you should be using our current lectures or current books from publishers. I'm going to do it the current way, which, as I say, is actually the easiest. So let's start working through. First of all, the labour rate. Planning variance. And to get the, well, we're after labour rate variance, and we're looking at how much it changed. You see, the original standard was 12 an hour. We revised it, our change of plans, to 11.40. So it's saving us 60 cents per hour. And how do we work it out? To get the planning variance, we take the actual hours we worked How many hours did we work? 1, 2, 3, the fourth line, 12,000 hours we worked. And to look at the effect of changing, of revising the rate, we cost it out at the difference between the original standard rate of $12 an hour and the revised rate. So the revised rate, we changed to $11.40. The original rate was 12. We're saving 60 cents an hour on 12,000 hours. The variance is therefore 7,200. Favourable or adverse, or we revised it, we revised the rate downwards. It was saving us money, 11.40 instead of 12. It's 7,200 favourable. So that's how much we should be saving as a result of changing our plans in the way we did. However, what about the operational variance? This is looking to see, did we actually pay $11.40 an hour or not? Because that's what we should now be paying. If we paid more than $11.40 an hour, we've lost money. If we paid less than $11.40, we've saved money in our operations. So let's compare what we actually paid last line of the first paragraph. We actually paid $136,800. How much should we have paid? Well, to see how much we should have paid, take the actual hours worked at the revised standard rate. As I said a moment ago, we should have been paying them $11.40 an hour, having changed our plans. How many hours did we work? Fourth line down, well, we had it earlier, 12,000 hours. We should now be paying $11.40 an hour, and so we should have paid $136,800. And so the planning variance, the operational variance is nil, 0. We paid the right amount. So that's all well and good. Let's now look at the efficiency variances. So number 3, the labour efficiency. Now remember, efficiency, we're comparing, or we're checking, did we work faster or slower than we intended? And first of all, the planning variance. Oops. Well, I already know straight off whether it's going to be favourable or adverse, surely, because our original budget was that it should take half an hour for each unit. We revised it that it'll take 0.6 hours. So clearly, the planning variance, when we change the plans, when we revise the budget, we expect to take longer. We expect it to cost us money. Well, to work it out for the planning, we take, for the efficiency, we take, see how many hours we revised it to. What I mean is the revised hours for the actual production, we actually produced 20,500. And when we revised, when we changed our plans, how long should we spend on each batch? It was 0.6 hours, I think, yes, 0.6. So in hours, the revised budget, we would expect to take 12,300 hours, whereas the original plan for the 20,500 we actually produced, we originally planned on only 0.5 hours, which is 12,250. That can't be right. 20 certainly isn't right. 10,250. And so the change of plans, we're now expected to take an extra, I'm scared of 12,300 minus 10,250. We actually we're expecting rather to take 2,050 hours more than we originally budgeted. And you see, it works in several ways. I mean, I could have almost written it straight down. On the 20,500 units, we planned to spend an extra 0.1 of an hour. Regardless, though, we planned to spend an extra 2,050 hours. And, sorry, I'm just checking my subtraction, yeah. We need to cost it out. We cost it out at the original standard cost. The original standard cost per hour was what, $12? I think, yes. And so, how much would that have cost us? The change of plans, 2,050 at $12, 24,600. And as I said earlier, since we revised upwards, we revised each batch should take longer. We were expecting to spend more. That's an adverse variance. Finally, of course, we revised to 12,300. When we look at the operational variance, we're saying, did we take the 12,300 hours that we now expect? Or did they work faster, did they work slower? So last of all, for the numbers, the labour efficiency operational variance. And some of you write all these as formulae. I hate writing formulae. I think it's dangerous. If you understand what you're doing, you don't need formulae. For the labour efficiency operational, we simply compare now how many hours we actually worked I had it earlier, but let me check. Yeah, fourth line of the question. 12,000 hours is what we actually worked. For the operational variance, I need to know was that longer or shorter than what we now planned to work, the revised hours, the revised standard hours for the actual production. The actual production, 20,500. The revised hours, each batch should take 0.6 hours. 12,300. And therefore, we actually worked faster than we now expected. 300 hours, we're going to have a favourable variance. Cost it out at the original standard cost per hour. Well, I've just got written down there anyway, but the original standard cost per hour, right from the beginning, $12. So 300 hours at 12, the variance is 3,600. I did say a moment ago, but be clear, that because we've now budgeted on working 12,300 and we only work 12,000, we've actually worked faster, it would save us money, they're more efficient. It's a favourable variance. So there we are, 8 marks for part A. What about finally part B? assess the performance of the production manager. For November. And do note the last sentence of the first paragraph. The production manager at Truffle had no input into the budgeting process. So the original budgets, nothing to do with the production manager. You can't blame him if those budgets were good or bad or whatever. Second paragraph. At the end of October, the managing director offered the staff of having a 5% pay cut or facing redundancies. They accepted the pay cut. And so, the budget revision, nothing to do with the production manager. It wasn't his decision. So he was left with a budget. He was then expected to pay $11.40 per hour. Presumably, he's actually responsible for implementing it. And in fact, we did actually pay $11.40. That's operations. So assuming he had control there, he's actually done a good job in terms of the labour rate. He paid what he was supposed to do. Although, since the staff had accepted it, perhaps it's not really anything to do with him. But, at least he wasn't having to pay overtime and that sort of thing, which he might have had to do otherwise. What about the other bit, though? The retailer wanted them made softer. And that makes the process 20% slower for at least the first month. And we've only just done it. Well, fine, if this softer, I don't think we can blame the production manager for the fact that we did have to revise the plans. And that since it's bound to be slower for the first month, fine. That's going to lose us money, 24,600. Hopefully it is only for the first month. Hopefully in later months we can get faster. But that change in plans was rather forced on us by the customer. Not much we could do. However, assuming that the 20% was a reasonable estimate of the time it would take, when it came to actual operations and implementing it, the production manager seems to have done a good job getting the staff to work faster than we originally expected. That they've managed to save 300 hours. You see, we originally budgeted on, what was it? 10,250. We changed it to 12,300. Again, that was forced on us, but it does appear the production manager's got people to get used to it a bit quicker than we expected, and that has saved us a bit. And so really, I don't think there's anything extra you can say. I've said several times in the earlier questions, I'm not going to write all that down. Otherwise it'll just get boring. Read the examiner's answer, learn from it, but do appreciate she writes more than she expects. And when you do write it down, I made a comment on each of those variances effectively. Planning perhaps wasn't his fault. He's saving money on the efficiency. But when you are making several points like that, don't write them just as some sort of long essay. The examiner will fall asleep. Each point, leave a line, keep them fairly short, 1 or 2 lines, but after each point, leave a blank line. There's much less chance of the examiner, of the marker rather, missing anything. And as far as your writing, you're the worst person to judge. You can read your writing. That doesn't mean to say the marker can. And so, certainly, sort of key words, either write a heading or write it in capitals or underline it. You know, I would head them up and comment on each. Labour efficiency variance operational, and then I'd write a comment, then head up. Labour efficiency planning, and then write a comment, and so on. Good.